Welcome to Ty and Rye, the Finance Guys Market Mini Report, a short podcast that updates you on the past week's important topics and trends. Remember, this is not an offer to sell, and past performance does not guarantee future returns. Here are Ty Hansen and Ryan Robertson.
Hello and welcome to another Market Mini for the week ending November 19th. Appreciate, as always, the listen, and excited to be able to share a little bit of market insight with you each and every week. So this week, a little bit, still a little choppy, like we've been experiencing, the last 10 to 15 days. The markets are coming off that high that we experienced through October and early November. But all in all, data's still looking pretty decent. So this last week, NASDAQ was really what carried the market. The S&P was basically flat. The part of the market that really, kind of carried and had any kind of return was tech, like we were just talking about. Bonds were okay last week. They did fairly well because of this increase in volatility. Really, though, the Dow and small cap took a little bit more of a beating this last week. So definitely more centralized and focused with any kind of returns this last week. So, people with a heavy tech portfolio were happy with the returns. But all in all, it's one of those things. I think we as anytime we see a really good run in the market, we'll start to see, some basic corrections, things like that. There's nothing, in my opinion, that's too unnerving about the Dow and the small cap section of the market selling off last week. I think we're still in really good shape. So but again, tech, obviously we're seeing some good information there. Still, we keep seeing some of the reports from earnings from quarter three roll in over the last 2 or 3 weeks, and things are still good there. So excited about that. The two key pieces of information this last week that came through that were really, really awesome. So the retail sales percentages, like how much did retail sales increase through the month of October? It was projected to be around between 1 and 1.5%, and that actually ended at 1.7%. So retail sales, which 20 basis points, is that really a big deal, Ty? Yeah, it actually was. So what this means is, even though we're still seeing inflation rise, I mean, we're talking some of the highest inflation numbers we've seen in the last 30 years, right? Even though that's rising, it's good that we're seeing good economic output, right? Retail sales are higher than expected. That's a good thing. So, even though it's costing us a little bit more for goods and for certain services, we're still paying for it, right? We're okay with it, which is good, right? We understand why there's some inflationary issues going on right now, and the fact that we still have good economic output's awesome. There's also another report that comes out, the Leading Economic Indicator Report. That actually came out a lot stronger than was projected, right? So with almost a 1% increase in October, which is, again, that leading economic economic index. Really, what it tells us is not just how much is being spent, but kind of what's the momentum behind spending. What is the economic output, right? It's a little bit better indicator of buying and spending trends, right? It's things like that. So, and again, that was a lot higher than was expected, right? Nearly 1%. And previously we were seeing it, close to being pretty flat. So what this really tells me is, as long as we're seeing decent growth rates and indicators like this, right, where the the average consumer in our economy is still spending money, that's keeping us away from stagflation, right? Which stagflation is anytime you have an increase in inflation and then you see a proportionate decrease in economic output, like GDP, retail sales, all those kinds of things. When you start to see that slow down as that's rising with inflation, that's stagflation. That's really bad. That's where you really start to see an economy slow down, markets start to sell off, things start to get really bleak. So again, we're handling this rise in inflation fairly well, right? The common man or woman out on in America, out on Main Street, USA, they're still spending money, right? Especially as we're starting to gear up towards, Christmas, right? We're still seeing that Christmas spending. So anyways, again, not the greatest week. Still projecting some decent return data by the end of the year. So now again, nobody knows for sure, but just as I'm looking at some of the projections and different analysts' thoughts and earnings reports, estimated earnings for the next little bit, things look strong. And so when you continue to see strong spending, even with this inflationary scare kind of lingering in the background, it, in my opinion, it points towards, continued returns in the market. So anyways, as always, thanks for the listen. We appreciate it. Check us out as always at tieandrye.com. And we appreciate the listen and glad we can bring you this information every week. Have a great weekend.
Thanks for listening to Ty and Rye, the Finance Guys. This is our weekly market mini report. New episodes of this will be put out every Monday, so make sure you don't miss those. Also, the longer podcasts, more in-depth discussions, those will drop every Saturday. So subscribe on your favorite podcast platform or follow us on TikTok, Instagram, Facebook, Twitter, YouTube at Ty and Rye Podcast. That way you don't miss any new episodes. Thanks for listening, everybody. Hope you have a great week.